Fighting drugs in the workplace, a bigger trade deficit than expected, and Drexel's bullish forecast on stocks. From the producers of the Financial News Network, this is Business This Morning. Good morning. I'm Doug Ramsey in New York. It's Friday, June 10th. Our top story this morning, drugs in the workplace. President Reagan took his wife's Just Say No crusade to corporate America yesterday, addressing a national conference in Washington. Bob Cardin reports.
At the Drug-Free Workplace Conference, President Reagan said that drug abuse was not a victimless crime. And more often than not, American business is the victim.
What was once defended as a so-called victimless crime, we now find is costing America billions of dollars a year in lost productivity. We're finding that drug users are 2 or 3 times more likely to skip work as non-users, and 3 or 4 times as likely to be involved in accidents when they do show up.
So corporate America is now making a concerted effort to control drug abuse. And one surefire way to do that are drug tests. The experts say the threat of losing your job over a positive drug test works.
And perhaps the most glorious case history of all is the U.S. Navy, which reduced the positive drug tests for its sailors from 47% to 4% in just 3 years.
But drug tests alone won't stop the drug problem.
They found a stat. We cannot police our workforce 24 hours of the day. We need to affect attitudes.
The president says he senses such a change of attitude across the country.
God bless you. The momentum has shifted from those who celebrated the drug subculture to the people who just say no and help others to do the same.
Bob Cardin, Business This Morning, Washington.
President Reagan is also expected to sign a bill soon banning the use of lie detectors in most companies. On Thursday, the Senate passed the legislation. Government agencies and some defense contractors are exempt, but the only other exception to the rule would be when an employer is cooperating with a criminal investigation and has reasonable suspicion that the employee is involved. The agency that insures the nation's savings and loans got a vote of confidence yesterday from a top Treasury Department official. Undersecretary George Gould said that the Federal Savings and Loan Insurance Corporation is equipped to handle any foreseeable bailouts of ailing S&Ls.
It is also important to realize that whatever the size of the problem turns out to be, that FSLIC is well equipped at the moment to handle, say, $20 billion of problems over the next 3 years.
The Wall Street firm Drexel Burnham Lambert tried to get back to business Thursday following the disclosure that the Securities and Exchange Commission will bring civil charges against the firm for violating securities laws. But as Casey Wyan reports, the only thing that was upbeat at Drexel's semi-annual outlook briefing was the stock market forecast.
Despite 2 ongoing federal investigations for alleged securities law violations, Drexel Burnham Lambert executives met with the press to talk about their investment outlook. But it's clear that a siege mentality has developed at the brokerage firm.
I felt over this period, and I think my associates have, a bit like the old end who played for West Point in 1958 named Bill Carpenter. Bill Carpenter was known as the lonely end because he never came into the huddle. And no matter what he did, he was always exposed. And we certainly have felt exposed over this period of time.
Siegel was talking about Drexel's bullish stock market forecasts, but he might as well have been commenting on the overall mood at the company since the probe began nearly 2 years ago. Michael Milken, Drexel's junk bond chief, who's at the center of the investigations, wouldn't talk on camera. Neither would Drexel chief executive Fred Joseph, who denies any wrongdoing, blaming the case on false information from convicted inside trader Ivan Boesky. No one at Drexel's been indicted yet, but the investigations have taken their toll, even on the firm's clients.
Periodically, we do run into some people who are unhappy. Many of whom were unhappy initially have been kind enough to have changed their views over these past 12 or 18 months.
Drexel is taking a business-as-usual attitude. The company's semi-annual economic briefing was held yesterday, with Drexel analysts confidently predicting the stock market will keep going up. But in light of the company's legal and internal problems, the question is, will anyone listen? Casey Wyan, Business This Morning, New York.
The U.S. trade deficit in March turns out not to have been in single digits after all. The Commerce Department has revised the March figure from $9.7 billion, the original estimate, to $11.9 billion. The change was contained in a report that seasonally adjusts past trade data in advance of the April trade deficit figure, which for the first time will be done on an adjusted basis. Joining us now for more on the change is our economics editor, Ed Mervosh. Ed, that change for the March figure was very large. There must be something more than just a seasonal adjustment here.
In fact, very little had to do with weather patterns or seasonal changes. A lot had to do with the way the numbers are counted. Our collection of trade data is so bad that we have to rely on Canada, who is our biggest customer, to tell us how much we sell to them. The Canadians overestimated by a couple of $1 billion or so how much we exported to them. So when that adjustment was made, our exports went down, and that made the trade deficit look worse. But in fact, it's just another sign that despite these changes they've made in those trade data, you have to be very, very careful in using them because they're still very flaky numbers.
Were we overly optimistic before then, and is the picture therefore not as good as a lot of people have been assuming?
No, I think the picture is much brighter than people had been expecting. If you look at the first quarter of this year as opposed to the first quarter of last year, you find that our trade deficit is down about 13% from that time. The trend is down much faster than people had expected. I think by the year's end, we may have a trade deficit that's $40 to $50 billion smaller than it was last year.
Ed Mervosh, thank you very much. Farmers and the financial community have all been watching the weather for any sign of how the drought in the nation's breadbasket may affect prices. And as Kathleen Campion reports, the U.S. Department of Agriculture has now weighed in with its first major crop report predicting trouble.
Whether it's feeding the herd or feeding the family, the state of the wheat, corn, and soybean crops underpins prices at the market and, to a large extent, the risk of inflation. The U.S. Department of Agriculture reports that the winter wheat crop is off some 7 million bushels from last year. The supply of soybeans and corn off as well. Not surprisingly, the prices of these actively traded commodities are on the rise. This is no trick of the market, though. This is Mother Nature.
We have only had 3 previous 6-month-long droughts. This appears to be the formation of the 4th.
Near-drought conditions are jeopardizing the wheat still to be harvested and enhancing the value of the grain already in silos. Great for farmers, but consumers?
I think consumer prices in the months ahead, particularly at the food store, will show price increases. I doubt that you'll see those price increases move through the consumer sector until September, October, November.
The U.S. position as a major exporter is at risk as well.
We're going to destroy the demand-oriented base that we have built over the last couple of years, and agriculture in the U.S. will suffer the consequences.
Still, none of this is a sure thing.
We're at the most critical stage the next 10 days in the marketplace to do we have a drought, don't we have a drought.
Tomorrow's forecast could turn the whole thing around. Kathleen Campion, Business This Morning, New York.
And coming up on Business This Morning, Walt Disney and other companies cash in as the Japanese start to work less and play more. Plus, in Working Smarter, John Cleese offers some advice on how to be a good team leader.
Business This Morning is brought to you in part by U.S. Sprint, official long-distance sponsor of the 1988 U.S. Olympic team.
Stocks climbed to their highest level since last October's crash, but a mild case of acrophobia set in. That fear of heights sent stocks lower as many traders worried that this week's rally was too much too soon. The Dow Jones Industrial Average begins today down more than 9.5 points. The broader S&P 500 index is also lower, but stocks gaining ground outnumbered losers by a slight margin. Volume on the New York Stock Exchange fairly heavy at 235 million shares. Average prices on the big board begin the day down 0.3%, while stocks on the American Exchange and in the over-the-counter market continue to outperform the blue chips. Dividend-related trades again dominated Thursday's trading. Detroit Edison was the most active stock on the New York Exchange. Yesterday was the last day investors could buy the stock and qualify for its attractive 12% dividend. H.B. Fuller took a beating, dropping more than $6 on word the industrial adhesive firm will make less money in the second quarter than it did a year ago. And Macmillan is also lower. A federal judge says he will rule today on Robert Bass's efforts to block the publishing company's restructuring. That plan is an attempt to thwart Bass's hostile takeover bid. Bond prices are slightly lower, with the yield on the Shearson Long-Term Treasury Index climbing to 9.21%. And commodities prices, which have been very volatile in recent days, settled down a bit, with the Commodities Research Bureau Index climbing only 0.7%. Now for the outlook on today's market, our Friday regular, Bill LeFevre, joins us. Bill, yesterday we saw a slight retrenchment, Dow down about 9.5 points. Still a great run-up over the last 10 days or so in the market.
Sure.
Any buys left in the market?
Oh, sure, Doug. You know, while the market's up maybe 150 points in the last 2.5 weeks, it's still down about 600 points or 22% from its record peak last summer. I got 5 stocks here that are down at least 25, if not 30% from their recent highs.
So more than the average of the market.
And they're quality stocks, American brands. Now, a lot of people think of cigarettes, but they're also in golf balls and insurance and applesauce. I mean, this is a diversified company. It's been hurt. CSX, a railroad and resorts. Great Northern Yakuza, that's an undervalued paper company. May department stores. Now, remember what happened to Federated and Allied. Now, these guys may also have real estate, and somebody might want to take them over. And then there's Occidental. Occidental Petroleum is also a chemical company. Now, those 5 stocks are undervalued. They're just 5. There's a lot of others.
They have the undervaluation in common. Do they have anything else in common? Are these all takeover candidates?
They're all takeover candidates or restructuring or shareholder enhancement, whatever you want to call it, and they're also blue chips. And this is the thing that I think too many people are avoiding now. They should not go with the, the $1 and $2 stocks. There are quality stocks that have a ways to go on the upside. And I think this market's going to go a lot further. Remember, a week from today is Triple Witch, and about 3 weeks from now, the month ends. And with all of that cash on the sidelines, I think a lot of it's going to go in the market, which will mean for higher prices.
And look at blue chips.
And look at blue chips.
Bill LeFevre, thanks very much. See you next week. And coming up in People Watch, Citizen Murdoch's growing TV empire. But first, today's smart money tip. If you're thinking of buying a new car, 10.92% is the average rate nationwide on a $9,000 new car loan for a 4-year term. Our business focus this morning, Japan's leisure industry. Sounds like a contradiction in terms, right? Well, maybe not for long. As Rich Varner reports from Tokyo, more and more Japanese want to have fun, but it's not that easy or that cheap.
These are some of the most overworked Japanese you can ever meet. They're from the Leisure Development Center, a government think tank. Their job, to study how to keep other Japanese from working so hard, to get people to relax a little and enjoy their new position as the world's wealthiest nation. Seems strange, but this is a real challenging job in Japan. The official explains that Japanese would rather work than take time off. This is a country where the 40-hour work week still hasn't caught on. The official work week is 46 hours, and it's common for companies to work on Saturday. Many Japanese are entitled to 3 or 4 weeks of vacation every year, but few take it. They simply would rather work. Part of the problem is the high cost of leisure. In a jam-packed country like Japan, sports like golf cost hundreds of dollars just for 18 holes. The Japanese have a cheaper alternative, these human bird cages. The golf-hungry Japanese climb inside and swing away. It only costs $10 or so. Then there's fishing. Anglers can fish right in downtown Tokyo in concrete pools stocked with fish. White-collar workers don't even bother to take off their neckties, and the office is close by so they can get right back to work. And they have the all-time Japanese favorite, pachinko. This is like pinball, when the ball drops into a hole and you win more balls, and in the end you exchange them for prizes like cigarettes. The problem with all these ways the Japanese spend their free time, they're just not that relaxing. Some American companies with famous leisure concepts are taking advantage of this vacuum in the Japanese leisure industry. Say, for instance, Walt Disney.
Tokyo Disneyland has been tremendously successful here in Japan. It opened in April of 1983, 5 years ago, and we have hosted over 10 million visitors each year since opening.
The leisure market here is vast. 30 million people live within just a 30-mile radius of Tokyo Disneyland. Altogether, 120 million people live in Japan. And in 1986, they spent $450 billion on leisure. Government officials predict this amount will double by 1995.
Japan is a land where 40-hour work weeks are a novelty, and the Japanese still don't quite know how to enjoy their newfound free time. Here's where companies like Disney are discovering a real business opportunity, teaching the Japanese how to relax. Richard Varner, Business This Morning, Tokyo Disneyland.
In People Watch today, a penny-pinching big spender on defense and Murdoch's mega venture. Rupert Murdoch recently started up the Fox television network here in the U.S., and he's big in Australia as well. Now he's planning to launch at least 2 new channels that'll be beamed down by satellite across all of Europe. As early as next February, Sky Television, as it's called, will offer an all-news channel in English, a movie channel, and eventually a sports network broadcasting in several languages. Les Aspin made a name for himself in Congress, ferreting out waste in Pentagon spending. Now the Wall Street Journal is taking the Wisconsin Democrat to task for perpetrating the same type of waste. Seems Aspin is lobbying hard for the U.S. Army to buy thousands of trucks it doesn't even want. Reason, they're made by the Oshkosh Truck Corporation, a Wisconsin company that, while not in his own district, did contribute to Aspin's campaign fund last year. American business is pumping a lot more money into new plant and equipment this year, 11.5% more, according to a new survey by the Commerce Department, almost 10% according to a private survey. And Bill Wolman, chief economist at Businessweek magazine, says that's a reason to cheer. Bill.
The amount the company spends for new plants and new machinery and equipment really matters to our future. Investment in new plant and equipment is what drives production and productivity. And productivity ultimately determines what will happen to our standard of living. For this reason, the Survey of Business Capital Spending Plans for 1988, released by the Commerce Department yesterday, is the best kind of news. It shows that after inflation, companies plan to boost spending by 11.9% this year. This represents a sharp increase from the 8% increase in 1988 spending reported in April and the 6.2% reported last November. The boost in spending plans sends 3 clear and cheerful messages. First, it means that the economy will stay solid throughout the year. Second, it means that capacity shortages will be eased, keeping a lid on inflationary pressures. It's worth noting that the biggest spending boosts are in areas where capacity is tightest. Third, it shows that the manufacturing revival in the United States is for real and will be sustained. Hallelujah.
Bill, this revival, you say it's going to be sustained. Does it come as a surprise after the crash just a few months ago that everyone is still spending so much?
It certainly does. It's one of the great puzzlements of all time. But I really think that it shows that the effects of the dollar depreciation are really beginning to have an impact, and our trade is really improving, and manufacturing is improving. A lot of what's going on, of course, has to do with heavy Japanese investment in the United States, Doug. That doesn't show in these figures, but it creates sort of an overall demand for capital goods. So I really think it's going to be sustained, and it's just terrific.
A lot of optimism there.
Yep, and I think it's one of the reasons why the market's so strong, Doug.
Bill Wolman, thank you very much. And still ahead on business this morning, a brokerage account that acts like a bank account and credit card all rolled in one. That and more when we return.
In funny money today, $1,245. That's how much of U.S. humanitarian aid to the Nicaraguan Contras was spent on baseball and volleyball equipment in 1985 and 86.
Even if you only buy or sell stocks occasionally, there's a new type of account that allows you to pool your finances all in one place. Tyler Matheson of Money Magazine explains.
There's a sure thing on Wall Street these days that can make your financial life a breeze. And it's not an inside stock tip. It's a street name brokerage account. This flexible investment and cash management tool combines a